Hey team, it's Ryan with Ryan School of Business. I'm here at the usual place that I come here at the ocean to talk about inflation and sort of economics and finance and how it affects our lives. I'm enjoying getting the comments and some of the WhatsApp responses from former students and people new to the channel. Very much enjoying responding and talking to you guys. And I wanted to make this video this afternoon and evening as I was thinking and seeing a pattern. And I often talk about with my students how important it is to analyze the situations that we're in now, but actually looking from a historical perspective as well, to see where we've seen some common trends and common threads. And one of the things I like to do with economic history is kind of look at empires, look at nations, and see the rise and fall, really, in many instances. And sometimes nations and empires are actually able to reinvent themselves to find a way to adapt and to sort of integrate all the different types of cultures and ideas and methods that they have, and extend it, and that has happened before. We can see that with the Roman Empire, and you had your eastern half and your western half. Also, when I looked at sort of the Spanish Empire, I found some interesting things as I was digging, and sort of seeing how certain behaviors with regard to societies and currencies impact how people live. And when I look at some economic history, I was really surprised when I read some accounts and see such similarities, similar to what we're seeing in Europe or UK or America right now. And I noted in looking at the Roman Empire, just when we got into positive territory, so the AD's time, but up till about 9 AD, within the Roman Empire, there was a lot of territorial conquest going on before that. And so when they would conquer an area or territory, they could then, let's just use the word, exploit or extract the resources that they got from the new areas of the conquered peoples, conquered nations, conquered resources, if you will. And that funded the empires, the cost of doing business, so to speak, and that allowed different expansion flows, if you will, and things continued. But around 9 AD, they stopped with the sort of idea of constantly sort of extracting everything from the conquered peoples, because socially it led to a lot of unrest. So they started to say, we're going to have to fund operations, we're going to have to fund the empire, so to speak, just based on the economy. We can't just go conquer something else and sort of bring in those resources or taxes, however they did it at the time. So in the very early years, single digit AD, in the Roman Empire, they started to say, we've got to live within our means, so to speak, and we've got to use currency as we can. And back then, currency and money and gold or silver were basically all related and linked. And as a result, they found that they couldn't spend on war campaigns, they couldn't spend on social programs, they couldn't spend on vanity projects for emperors or whatever it was. And this phenomenon started with regard to clipping coins, the Roman coins, and mostly it was silver then, but sometimes gold. But they would start to basically shave away the silver or the gold, and then with those shavings, the currency would go ahead and transact, and it would get smaller and smaller and smaller. You can kind of see with empires just going from 9 AD to 350 or something, or 400, and you could see that there were great shrinkages of the currency. It got almost laughable how small their currencies got, the coinage. And then they would use the shavings to make new coins, and that was a way they could expand the money supply. back before we had paper money, back before we had digital money like today. So what they did was with the shavings. And I noticed that it ultimately led to an abuse of that, and then a hyperinflation and a recession and demand destruction. It's like, wow, this same pattern happened. It's just, it was done in a different way. Before that, there was a lot of conquest, and you got resources, wealth, etc. through those means. When that stopped, you had to basically grow the economy, and if you couldn't spend more money. So what they did was they expanded the money supply that way. They couldn't find any more silver or gold, couldn't mine anymore, couldn't take anymore. They had to just shave it down, and that's how they grew the money supply. And then it got to be an increase, even multiples of the money supply that way. It led to hyperinflation. Well, as I was digging and looking, I also found that this supply and demand equation with regard to money supply, it's in any way, shape, or form we see it. And there was another example that occurred with the Spanish Empire, and it started when the conquistadors, headed to the Americas and found huge discoveries of gold. And when they then brought back this increased money supply, if you will, which would go into the king's hands or the nobles' hands, the elite's hands, if you will, it led to a huge increase in the money supply via the gold holdings that were discovered. And it led to eventually a hyperinflation as well. And it's fascinating to me, but the average person, actually, when we had modest deflation or very little inflation, actually the middle of the equation, the middle class or the average person did much better. So I wanted to talk today a little bit, as I'm seeing the same pattern with increased money supply. It usually leads to rapid inflation for a while, eventually followed by sort of a crash or deflation and demand destruction, and eventually it kind of will sort itself out somewhat. The problem is the fall. The problem is, what does it look like? How hard and ugly does it get? And from that perspective, this is why sort of planning, saving, hedging matters so much, and why we have to sort of live that way and be more frugal and plan ahead, because there are macroeconomic events that happen and occur. And this is not new. I just didn't expect that I could go back to around the year one and find this. But that's when money supply started to expand, and we had this monetary expansion, inflation. So it happened in two different ways. One was clipping the coins, kind of shrinking the coins. The others were in these gold discoveries in the New World and brought back to the Spanish. And they ended up getting double, triple-digit inflation, and the average person really felt it. And now I've seen this trend kind of work its way through. So whenever we have this phenomenon, it's going to eventually lead to rapid inflation. One of the differences we have right now, and why we don't see this so much in some countries, let's say Italy or Germany or Japan, it hasn't been as bad, partly because you've got aging demographics. So generally speaking, older people do not spend in the same way. They save more, invest more, and don't consume as much. They also don't earn as much. So as you've got an aging population, in general, that's what happens. So you can tolerate a little more monetary expansion or even fiscal stimulus by governments in that case. And Japan is kind of an example of that. It's one of the topics we'll look at. But for now, I just wanted to say I'm seeing this connection, and those of you that like history, I encourage you to kind of come along this ride, as we'll take a look at some economic history as well and try to connect the dots for today. Another aspect I wanted to comment on in kind of current news of today is the European Central Bank has increased its interest rate another 0.75%, 0.75. 75 basis points again. And the ECB is doing this because inflation is proving to be more persistent and riveting through the economy, and the only way to crush it and stop it is generally by raising interest rates, kind of choke off demand for loans, to choke off cost of expansion, to make it more difficult for prices to rise. You have less purchasing power, it's more expensive to borrow money, corporations have a harder time, and consumers have a harder time. More people save rather than consume. I mean, there's a lot of factors at play why rising interest rates will kind of stop quantity demanded, and help bring down prices. The only other way, and you have seen this done in society, if you don't raise interest rates to try to stop this persistent inflation, you have to enact price controls, which, following the economics here, you do that, and eventually your supply and demand equation will be out of whack. It'll lead to shortages. That's what happens with price control. So there's really two ways to stem off high inflation. One is you cap prices, and that will not work. Or you raise interest rates, and that will make a slowdown happen. But anything that's financed, say homes or bonds or the stock market, there's a lot of borrowing that drives interest in bonds, buying securities, stocks, etc., even cryptos. Anything that's leveraged, people borrow money to do. If the cost of borrowing goes up, it punctures markets. They're going to fall with rising interest rates. So we're looking for that and see that. And you see currencies strengthen generally when interest rates are risen, because they become more attractive as an investment, or even holding that security. So rising interest rates are generally what you will see as things go forward, but we can expect bond markets to fall, stock markets to fall, and real estate markets, commercial and residential. So that's what we have playing right now as the ECB sort of takes on the policy of raising interest rates, just like we see happening in Canada, just like we see happening in the United States. And most of Europe is having this same phenomenon. It's what we do when there is high inflation that's sort of coursing through the economy. One of the reasons that I'm trying to point this out and to encourage you guys to begin to take note of macroeconomic and global economic kind of conditions is really born out of the fact that even though I was an investment banker and around some very affluent people, incredible wealth and those types of things, and participated in that world of Wall Street, my heart's always been really to look at the common person, and how do people actually live their lives. And what I find is, even when someone quotes the inflation rate, for example, they may say the inflation rate is 10%, something like that. Why I say it's more important and why we should care. It's not just that your purchasing power is going down, but what I find is it's not evenly shared. And by that I mean when we have price inflation, for example, groceries going up, or gasoline going up, or electricity going up, or rents going up, things driving up that way, cost of services, things like that. People demanding raises, driving up the price of services, things like that. Well, that 10% number is an average number. That means it's 10% on average to the society. But what I find is the people who make lower incomes, they experience a much different world. It's not 10%, and it's why they notice it more. And whether you make a lot or a little, it makes a big difference. Now, to a very wealthy person, if their groceries rise $300 a month and the gas bill for fuel goes up 150 and their electricity bill goes up $400. That's horrible to the person making $3,000 a month. To a person making $15,000 or $20,000 or $25,000 a month, those increases are hardly noticed. And in fact, what tends to happen though is many of those same people making 25, 30,000 or more and up, they also tend to own a lot of properties, a lot of apartments, a lot of houses, things like that, and the rents are going up as well. So in some ways, they actually are doing better. Rental income's up. So not only are they not feeling the 10% very much, but they're actually having an increase in income because rents and things like that are going up. So this is why, even when you look at the quoted number, say, 10%, that's an average. That's for someone making, $1 million a year or somebody making 10,000. But the problem is where it's coming right now. It's in groceries, it's in gas, it's in utilities. And those increases of 10% are a much larger percentage of lower income people. And that's why we feel it so much when you're at those levels. So that's why this matters. It's one reason I'm doing this channel. I want the little guy and little gal to see what's happening and what they can do to better protect themselves. I think that's going to probably do it for today. I'm just sort of letting you see out there. Some of you familiar with Santa Barbara, you might recognize some of those islands out there. Looks like we're going to have a nice sunset, and I'll take a shot. Maybe you can see sort of where things are headed out there. And started to get a little bit cooler after being warm today, so the only jacket I had was this blue blazer, so you got my dress up look today. And with that, I'm going to say goodbye for now, and we'll see you again.